How I started when I first started investing. Well, there's no easy answer because when I started, it was pretty random. So, I had a job, worked at Rite Aid, probably mentioned it before in one of my random LP videos, now that that's relevant. Anyway, what did I do? Well, we had a wholesaler called McKesson. You might have heard of them if you've worked in the industry. When I started, I kept realizing that we had to continuously order certain medication overnight, and when you order medication overnight from that particular provider, they charge you like 20 times more than it normally is because of overnight shipping and the fact that you need it urgently and blah 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 blah. Anyway, that's beside the point. But when that happened, it hit me, and then I kind of got into investing. It's just kind of random, but that's how I started. I was just working as a pharmacy tech, doing garbage work was actually pretty interesting, I guess, because of what I learned. But anyway, then when I started, the first company I bought was Apple. Very first company. And when I started with some arbitrary number, something like $50 a month or something, where I started investing. So for the first 3 or 4 months, I put in 50 in Apple. And at that time, I was able to buy partial shares, even though each share of Apple was well over $100, I believe. But I was able to buy partial shares of Apple, so it was $50 worked out quite perfectly. So after my first few months of investing and just buying Apple, then I thought of what is going to be. And that's when I discovered two companies that I really enjoy. One is Facebook, the other is Amazon. I got into both of them in 2014, same year as I got into Apple. But it was months after I started investing. So what my criteria was: what is the future? What has good management? And is management ethical? Now, of course, there's no major multi-billion-dollar corporation that's 100% ethical. It's impossible, just because of how big something gets. You don't, even if you're the CEO and everything, you don't have control over every little nick and cranny. But I focus on which executive teams, not just CEOs, but which executive teams were honest with the way they approach things. And if something that they did was wrong, they would eventually come out and say, hey, we screwed up. Let's, move forward. This is what we did wrong, and we're willing to admit that we did this wrong, and we're willing to move forward. And that's how I got into Amazon and Facebook. And then and then things kept going, and I continued to focus on the future. Nothing was ever buy now and I'll sell it 1 week later, or buy now and I'll sell it 1 month later. I bought the idea of that I would hold it for a number of years. That doesn't necessarily mean every stock I buy I end up holding for a number of years. Some stocks, like Netflix, for instance, I bought them fairly recently. I only held them for about a month. But the stock went up like 50% in that 1 month. I figured there's no point in continuing to hold this because it's just going to come down. So I sold it. But I don't go into the mindset that something's going to go up like 50% in 1 month or even 10% in 1 month. I go into the mindset thinking that, you know what, in 1 year, I do think that this stock will be a little bit higher than it was today. But that doesn't mean I'm going to sell it in 1 year. And that's the mindset that I went into. So you can see on screen that, let's just say, an arbitrary amount of $100 you started with. For the past 4 years or so, I started in 2014. I've grown about 20% annually. So if you do the math, 100 times 1.2 to the fourth power, which means 20% annually, you get 200 7.36. That means in 4 years, your $100 would have doubled. Now, of course, you're naturally going to add more money over time as you invest, but that's just an arbitrary number. And I'm not saying that you're going to get 20% annually. I'm just saying that somebody that really didn't know that much when he started, I got pretty lucky. But the main thing I can just say is it's about temperament, and it's about, really believing the decision you've made is the right decision, and not letting frequent price fluctuations really affect you in a negative way or anything like that. So the only advice I can really give is, you probably ended up getting into investing out of something random or lucky or whatever you might call it. But if you really stick to it and you remember your values, which my values were buying a company, having ownership of a company that does mostly ethical things, which is why most of my investments, actually all of my investments, are based primarily on, management, executive management that is fairly ethical. And yeah, not saying that my way is the right way. I'm just saying that that's the way that I've been doing it, and it's worked. Now, maybe you've been thinking about starting. You should just do it. That's what I did. If you just do it, it might be best to start small, or maybe you want to start a little bigger. I told you before that I started with $50, and it ended up working out quite well. And I have to say that 2014 me, who was just like, screw it, and just started putting $50 a month into Apple, I'm very happy with 2014 me. It's probably the best decision 2014 me, or just me in general, ever made, was getting into this, because you just start finding something you like, and investing has become that thing where I can just sit down, not eat for 3 days, and just read. You probably shouldn't do that, but you might end up doing it like I did, and then you might end up really sick or something. But don't do it if you can help it.